Welcome back everyone for another update on the gold market. Gold surged and even stabilized higher since our latest update, displaying further the demand it has attracted from the ongoing uncertain circumstances that surround the global economy. This report aims to briefly identify and consider some of the most probable gold market movers in the past and the next days. Some of the methods discussed make reference to points that relate to a longer time frame in order to perform a more complete view for the instrument. On the USD front, financial data from the US continues to display a minor rebound in the US economy. Economic activity has started to pick up, while this was also confirmed by the US Federal Reserve Chair Jerome Powell on Monday. Even though no major improvement has been confirmed yet, circumstances are much better compared to a month or 2 months back. Jerome Powell also stated the US economy remained in great uncertainty and that further economic support must be provided by the government in order to strengthen the foundation of a rebound. From the comments made by the Federal Reserve Chairman, we understand that the rebound will be performed gradually, and to reach levels seen prior to the virus crisis, the economy may need to wait several months or so. On a related note, gold may have also been driven higher by stimulus and monetary policy actions taken by governments and central banks accordingly from around the world. Also, the fact that interest rates are low and may remain low for the next year is also a possible reason for gold's upsurge. Gold traders around the world could be more concerned with whether gold remains underpriced at the moment than if it has reached an 8-year high. Moreover, the COVID-19 virus still persists in many countries of the world. As more cases have been announced, and looking at this from a global perspective, it is estimated that over 4 million people are still active carriers of the virus. So as long as millions of people are infected and no vaccine developed is confirmed to be efficient, worries that relate to the economy will be uplifted. During the current week, gold traders have many important financial releases to anticipate. The upcoming events are rather enticing for traders interested in gold, but they will also help market participants in general to form a more decisive opinion on the US economy's performance. On the 1st of July, we get the market manufacturing PMI reading along with the ISM manufacturing PMI. Manufacturing in general is very important for the US economy, and the readings could determine gold's action for the rest of the day, even overlapping from the US to the Asian session. Due to the upcoming Independence Day, when the markets will be closed, the start of the current week, the US employment report will be released on Thursday, the 2nd of July. The US employment report traditionally creates market waves, and volatility tends to increase substantially before and after the release of the data. Traders looking for continuous strong price action could use the 2nd of July to trade, as on top of the employment data, we get the initial jobless claims weekly figure and the factory orders reading that could add to the action. Caution is advised, as gold could undertake intense price action on the day. As a conclusion, we must keep in mind that during the difficult past months, gold's price was able to advance immensely compared to other instruments. During the past days, and specifically on the 24th of June, gold reached a new 8-year peak. Furthermore, during the previous months, April, May, and June, gold has performed consecutive upward movements, breaking previous highs. Moving now to the technical analysis and gold's 4-hour chart. Gold continued to move in a sideways motion for most of the latest 4-hour sessions, trading nearby $1770. If the previous precious metal is to move higher, it could make its way for the R1 1778.50 level, which was the highest price reached since 2012. Yet if the upward movement is extended, then XAU USD could move even higher for the R2 1790 level and even target the R3 1800 line. In a bearish scenario, the S1 1767.50 line could be initially reapproached, but the intensive testing it has undertaken in the last sessions could be an indication of a strong level that traders tend to respect. Lower, we have noted the S2 1760 level that was tested various times during the past week and seems to be also a solid hurdle. In a strong selling momentum, gold could also move even lower to the S3 1749 level that was last engaged on the past Friday. However, the shiny metal bounced off the S3 and headed higher, breaking all our support levels noted, performing an upward movement. The RSI indicator below our chart is nearby the 70 level, confirming the buying interest is still present. From all of us here at IronFX, best wishes for solid trading.